these are the best prices and the best availability I have seen in 4 years. Is the world all of a sudden better? Is everything behind us? Is it green shoots and prosperity ahead of us? Well, that would be nice if so. But if not, if things aren't better, if this is just the quiet before the storm, then this is the best value across the board in silver and gold that I have seen in 4 years.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 31st through August 6, 2023, while supplies last. This week we featured 2023 1/10 ounce gold eagles at just $37.50 over melt. The Gold Eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1/10 ounce eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1 ounce eagle, the 1/10 ounce eagle is 22 karat gold strengthened with copper. It's 1/10 of a troy ounce of gold, comes 50 to a tube, 5,000 to a box, and is available at just $37.50 over melt while supplies last. Finally, the Gold Eagle is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this weekly returning guest. Andy Schectman, the CEO of Miles Franklin Precious Metals, joins us for a weekly market update this Tuesday. It is Tuesday, August 1st, 2023. Andy, thanks for joining us again.
You know, if people only knew how many times we've had a laugh over that. I bet you there's probably been 100 of those where you get to that moment and you forget what day it is, or you say the wrong day, but you did good this time. Good to be back, Donnie. Thanks for having me.
Focusing so much on the topics at hand that, the minutia is actually important as well. And all of our viewers appreciate that when we put a timestamp on the video so they know they're getting the latest updates. We just returned late last week from the Rule Symposium in Boca Raton, Florida. It was great seeing you there in person, as well as Rick and lots of the other CEOs of various mining companies that we are having on our channel, as well as lots of other of some of our subscribers and some of the team and so on that we don't get to see that often. So just thought maybe give you a chance to share any key takeaways that you came away from the Rule Symposium with. I know one of the things I came away with was a fresh list of prospective companies to take a closer look at from an investing standpoint. Rick's always done such hard work and due diligence at screening those for us. It's a gift if you don't take a closer look at those. Other thoughts that occurred to you after reflecting on the week?
Yeah, I mean, to your point, it's become very evident to me in mining shares, it's not as much, well, it is what you know. And, you know, the first time I met Rick, long before I was really doing a lot of business with his clients, it was at a conference close to 20 years ago, and he was standing in the corner of a room with a crowd of people 100 deep around him, throwing out names of mining companies or throwing out their ticker, and he would rattle off everything from, you know, the name of the company, their geologic background, what he thought about them, what their reserves were, I'm like, this is just unbelievable. This is a guy that was doing this all, you know, off the top of his head. It's like a savant. So it is what you know, but it's also who you know. And he knows just about everyone in the industry, including the serial successful geologists. And many of the companies that he promotes you'll find a common thread, the same team that goes back, you know, years and years and years that I hear over and over and over again that are continually successful. For those people looking to buy mining shares, you know, certainly you could do a whole lot worse than to tune into what Rick has to say and the companies that are there. And it's interesting, I've been doing his shows forever, and it's usually the exact same exhibitors in terms of the mining companies, or very similar anyway, that are there. The ones that are successful, the ones that are run well and last the test of time. So I couldn't endorse it more. As far as what I took away from it, spending a few hours with James Rickards and talking to him personally over cocktails and listening to him at the show was fantastic. Very much supporting and confirming what I've been talking about for a very long time, his thesis of the BRICS and some ideas that he had around it. And as I mentioned on our live stream, which I was more or less a walking zombie at that point, had been there since 7 a.m, had done 2 speeches, had talked to 1 million people. And at 9:30 at night, 14 hours later when we started, it was interesting. Anyways, what I learned, what I really took away from what Jim talked about is something that you and I have talked about a lot, but I never really put the pieces together completely, although I did, but I didn't. What I mean was, everyone's focusing on the BRICS and the August 22nd meeting. Are they going to not issue a gold-backed currency? Look, ultimately they will, right? The gold was tier 1 revised. The central banks are gobbling it up. The BRICS nations are all the ones producing it and accumulating it. It's inevitable. Whether it happens the 22nd or not is irrelevant. But what I took away from it is the inclusion of the Shanghai Cooperation Organization and the Eurasian Economic Union. Now, I have mentioned them in nearly every interview I've done about the BRICS, simply because they have so much crossover in membership, where Russia belongs to all of them, where Saudi Arabia, as an example, has applied to the Shanghai Cooperation Organization, to the BRICS, to the New Development Bank, on the Belt Road Initiative. All of this symbiotic crossover amongst these groups told me that there's no question but that they're going to, at some point, be connected more than just in trivial, coincidental membership. That there was too much in common for me to ignore that. And I would constantly talk about them, saying when you put all of these groups together, the Belt Road, the Shanghai Cooperation Organization, the Eurasian Economic Union, and the BRICS, you're darn near talking 90% of human population. Well, what Jim did was to put a bow on that thesis and say that they are going to combine these entities into the BRICS at the meeting. Now, one of the things I talked about in my presentation there was that if you Google how many countries have applied to the BRICS, last year at that meeting it was 16. Now it's 41. It's growing, no question. This is a trend in motion and is rapidly growing. But if you try and find the list of those 41 countries, everywhere I would find, all I would come up was 25. Excuse me. If you back out of the Eurasian Economic Union and the Shanghai Cooperation Organization, the countries that have already or are already in BRICS or have formally applied, and add it to 25, you get darn near 41. So what he was saying, I believe, is supported on many levels. I believe it to be incredibly logical and makes great sense that these entities, these groups, these countries would coalesce into this common union. And really, to me, that was the most important takeaway regarding BRICS, that this is a trend in motion, that it is gaining momentum, that it is gaining mass, and it's inevitable. And I believe Jim believes that it will have a greater impact than a lot of people in this industry, not myself, but a lot of people believe it will. And his thesis was very interesting. In a nutshell, he said if they really wanted to make it tough on the West, they would issue 1 brick equal to an ounce of gold. He said the West will destroy themselves. The BRICS don't have to do anything, in the respect that if they realize that there's almost 200 trillion in obligations that we have, funded and unfunded, really the only pathway other than massive increase in taxation, really, or default, would be to inflate. And by inflating, the value of the dollar drops, the price of gold goes higher. Therefore, the price of the BRICS currency goes higher. If, like most of the world accumulating gold, the West decides to accumulate gold, the byproduct of that would be to sell dollars, decreasing the value, buy gold, increasing the value of the BRICS currencies. They don't need to do anything. Now, I asked him, do you know something about this that I don't? He said, no, this is my theory. But the interesting thing is, remember, Jim was brought into the CIA to do simulated war games. What financial war games? And what could a country do to our system, our financial system, to inflict damage? And this is a guy who thinks that way. It was really a very interesting thesis. I don't know that this will come out that way, but the point of it is, with all of this, is that we are seeing a massive change that is being embraced by the majority of the world, where gold will be a centerpiece because of its tier one revision, because of the massive repatriation and accumulation by these countries. And, you know, it's whether it happens August 22nd or it happens 6 months from now really doesn't matter to me. What really matters is this growing mass, this growing density, this growing group of countries that you know, is going to chip away at the reserve status of the dollar. He said one other thing, and I thought it was worth talking about, and that was that there's a lot of talk of the BRICS currency being a settlement currency at first. He is a big believer that they will issue a bond market, and they will use nationalistic patriotism to break free from the Western hegemony, the way that we did in World War I by selling World War I bonds to build and develop our bond market. Well, he would say a gold-backed currency issued by these countries with a bond market directed towards, you know, turning this settlement currency into a reserve currency, a real possibility. But even more so, if all of these countries, and you know, when I got up there, I said, look, the one thing that people aren't focusing on more than anything is the role of Saudi Arabia. Saudi Arabia, who is in position to make the switch themselves as being on the Belt Road with the other OPEC countries, as formally applying to BRICS and the Shanghai Cooperation Organization and the New Development Bank, telling the folks at Davos they'll take other currencies for oil. When they make that statement, when they say, hey, we're going to take the new BRICS currency for oil, or until it's up and running, we'll take the yuan and convert it into gold on the Shanghai Exchange, or whatever currencies they take, the damage that will inflict upon the dollar becomes severe. And if 8 or 9 out of 10 people on the planet in this group are settling oil and energy, just like Russia buying oil from China and paying, or selling oil to China and receiving it in yuan, or even more relevant, France doing a very large liquid natural gas deal, a massive one, and paid for it in yuan. That's a big deal. When we see all of these countries settling in other currencies, it begins to chip away at the reserve status of the dollar. And I think that it's inevitable. And I think he believes it to be inevitable. And so, look, the bottom line is simply this. I took away from this conference that someone whom I respect an awful lot, who is very tied in, believes that the BRICS and the hype surrounding it is real. And whether it happens August 22nd or not, it is something that I think people definitely need to pay very close attention to, as this is a major macro development, one that will shape and reshape the way things are in the United States once it fully takes hold. When that is, August 22nd or next August or who knows when, but when that switch is flipped, led by Saudi Arabia, no longer only taking dollars for oil, that is when things will change in a heartbeat. Until then, it's just more of the same, a faster moving development that is gaining speed and momentum.
So you're describing a lot of things that are happening in the eastern, well, can't even call it eastern anymore if you've got Brazil and potentially Mexico and so on, but the BRICS bloc. But meanwhile, in the Western financial edifice with the U.S., Britain, etc., although Japan's wobbling on that as well, there's continued weakness. We've been discussing normalcy bias, how since a couple of months have passed since the last rash of bank failures, where the number 2, number 3, and number 4 banks in the country went under, as well as one in Europe, big name, and Credit Suisse. But also now we just had PacWest get taken under the FDIC last week, and just get your assessment of what you're hearing, if there was any additional awareness is gained at the conference from any of the speakers about the fragility of not only the dollar which you've been discussing, but the U.S. banking system, because we've got so many of our clients in the U.S. and they're wondering whether their funds are safe in their small, local, regional, any size bank, or is it just going to be a culling and a basically a consumption up until the one bank to rule them all?
Yeah, it bothers me that the FDIC is hiding the bailout of these uninsured depositors. That this is supposed to be bail-ins, and this time the Kansas bank examiner said it was an isolated event, and that the Kansas banking industry is strong. Where have we heard that before? This is a story that has not seen its final chapters. You have a commercial real estate debt ticking time bomb that, you have over $1.4 trillion in commercial real estate loans that mature this year and next year, 70% of which are owned by the small banks and 61% of which are already delinquent. And these commercial real estate loans, the majority of which are called non-recourse, that they're owned by corporations that can just drop the keys, walk away, and go bankrupt. And you're going to see that. And the ramifications of that, to me, is extraordinary to what happens to the banking system. It's interesting if you look at everyone is focusing on the small and regional banks, and as they should. This is exactly the kind of stress that will drop more of them. But if you look at the amount of money that's leaving the commercial banks, the big sophisticated money, it dwarfs the amount that is leaving the regional banks. These are big money that are leaving the systemic risk of the banks, and I would argue maybe the ultimate, the probability of some really big bank failures heading into the third and fourth quarter as these loans reset and drag down with them lots of banks and lots of counterparty systemic risks, and they're going directly to the Treasury or directly to the government and buying, U.S. Treasuries, right at U.S. I think it's called gov. Or U.S. Treasury. You know what I'm saying, GovDirect or USTreasuryDirect.gov. I think that's it. Anyways, you can go right to the Treasury and sidestep the banks and remove that risk altogether. But, this is a risk that's not going away. You have the national debt that, since they raised the debt ceiling, is up $1.8 trillion since the debt ceiling crisis. And it took 209 years to add the first 1.8 trillion in debt. And 8 weeks after that, we've added another 1.8 trillion. It's ridiculous. It's unsustainable. And with $32.6 trillion debt and the unfunded liabilities in Social Security and Medicare and Medicaid and whatnot, you're close to $200 trillion. And by 2040, 100% of all taxes by 2040 will go just to pay the entitlements and the interest expense. This is a path that is not sustainable. And I think it's interesting when you look at what happened with the Bank of Japan, as you mentioned. This is a country that had been applying yield curve control to keep rates, in a pattern by buying bonds. And as it is, the Bank of Japan owns the majority of all the bonds. Well, they said they're going to back away from that, kind of like, we said we were going to normalize our balance sheet, and kind of like the United Kingdom tried to do the same thing. What happened there? Their pension market blew up. The bank had to come in, Bank of England, and go back to buying bonds again. Well, Japan did the exact same thing. They were talking about normalizing their balance sheet, and here just a couple days after, they had to come in with a $2.1 billion emergency bond buying operation just 48 hours after backing away or trying to normalize their balance sheet. And this is inevitable for all central banks that manipulate through what they call quantitative easing or counterfeiting. And the distortions that it creates, the distortions and misallocations in resources and capital create an environment where these assets have gotten so overvalued and inflated and distorted that by trying to normalize the balance sheet, you create way, way, way too many problems. So, yeah, what's going on here at home is it certainly needs to be brought into the equation. It's something that I talked a lot about in the presentation on a broader sense about all of the things that I think our foes are not ignoring. Largely things like our obsession with a cancel culture and things like censoring and the weaponizing of perhaps of the Justice Department and the FBI and the issues around the election, and are people being treated fairly under the law, and these whistleblowers that are coming out and pointing to all of this corruption, well, that's not lost on the people who are de-dollarizing. And I think a lot of people are wondering, is this the America that we all remember or talked about or read about or aspired to be like? And these are all things that are accelerating this ultimate de-dollarization. And, I think it's very important, and they go together. You can't just focus on what's happening outside the country, but I would argue what is happening inside the country is exacerbating and accentuating the desire to push away from the West. And, really what I was getting at during my presentations at the Rural Symposium was this intended? And I'll leave that up to people to decide for themselves, but there's a lot to think about when you look at, if you wanted to get rid of the world reserve status, the first thing you do is weaponize the dollar and antagonize Saudi Arabia. If you wanted to destabilize things inside this country, all of a sudden start focusing on things surrounding gender and freedom of speech and really polarizing red versus blue and black versus white and rich versus poor. I mean, there's so much divisiveness right now in this country, whether it be inside or outside. Yeah, things are changing, and that's kind of what I think I try to focus on, the big picture. And they're all related, and to say they're not is missing, I think, the big picture.
In the face of all of these winds of change that we find ourselves in, you strive every week to come up with a special that you can offer to our viewers. And I understand this week's is a bit different from what we've been doing for most of the past couple of years.
Yeah, everything is on sale, right? And which is very interesting to me, Dunnigan. As you and I often talk about, one of the best parts of the whole conference for me, I'm dead serious, was a few hours that we had together speaking candidly at dinner. And a lot of the things that we talked about not only meant a lot to me, but often also inspired a lot of thought since. And the one thing that we talk about being recency bias, we talked about that a lot. And I do think there is a lot of normalcy and recency bias right now. And I draw the analogy of the being in the eye of the hurricane. We saw the first half, people are now out for a walk because the sky is blue and everything is great, but to ignore the trailing edge that is coming is a mistake. And I think that's what's happening. I mean, if you look at the bleed down of all of the supply across the globe, it's extraordinary. There's one whale on COMEX right now, and it's a Chinese company, I believe, that has accumulated 50 million ounces of silver contracts. Are they going to stand for delivery? And guess what? It's in the other category. The others who have been very methodical at draining the world's exchanges. And this is a massive position. Are they going to stand for delivery? I bet they do, slowly. Anyways, the point of it is that you're seeing a massive drawdown at the very top. The LBMA, the ETFs, the Shanghai Gold Exchange, and the COMEX. This is the epicenter of where all the supply comes from. So does it ultimately have an effect on this industry? Of course it does, especially when something happens in the banks. Maybe they get bailed in or whatever it is that triggers things, it'll have an immediate effect. I say that to you because the ironic thing about all of this, in the middle of the eye of the hurricane, when all of the supply at the top is being drained, when the biggest money in the world, the others, which are the sovereign wealth funds and the family offices, the central banks, are on record buying spree, using suppression of price to run cover for what they're doing. But what is betraying the suppression of the price is the bleed down in the exchanges, where just the other day, by the way, and I know you asked me a specific question, I'm going to get to the other question, but even looking at things like GLD and SLV, last week, 200,000 ounces of gold came out of GLD. Where the hell did it go? And in silver, 1.5 million ounces of silver came out of SLV. Where did it go? Ted Butler said it looked much like metal being sent to places of more urgent need as opposed to plain vanilla liquidation by investors. It's exactly what it is. It runs cover for acquisition. That's what big money is doing. Is it going to India? Is it going to China? Is it going to Saudi Arabia? Who knows? But anyways, the point of it is that everything is on sale. These are the best prices and the best availability I have seen in 4 years. Is the world all of a sudden better? Is everything behind us? Is it green shoots and prosperity ahead of us? Well, that would be nice if so. But if not, if things aren't better, if this is just the quiet before the storm, then this is the best value across the board in silver and gold that I have seen in 4 years. We decided to do gold this time. And, we've done silver by and large for the past 3.5 years, almost every single week. Why? Because it still is, independent of the special today, the most undervalued asset on the planet. It still is, in my mind, the value of a generation. And try and poke holes in that on every single metric: supply, demand, its ratio to gold, both geologically and historically. Silver is an opportunity of a generation, and I mean that in my soul. But by the same token, when you see gold revalued tier one and you see gold's significance in all of the talk related to the BRICS and the Shanghai Cooperation Organization, and the legitimacy that it gives, and the acquisition and repatriation by the biggest money in the world, tells me you do not want to count out gold. A lot of people like silver because they wonder what the world will look like when everything goes crazy. So do I. So trading in gold is never a good idea in that environment. You get hit over the head with a baseball bat trying to trade a 1 ounce gold coin in that environment. But the 1/10 ounce gold coin is something that offers great liquidity and great flexibility. If I had my druthers, there are 2 coins that I would buy, or 3 coins, let's say, that I would buy over all else. And if you look at my personal holdings, you'll notice a tremendous amount of 3 gold coins: $20 Liberties, $20 St. Gaudens, 1/10 ounce gold eagles. Now, I've been doing this for a very long time when nobody wanted any of those coins, and I was able to amass a lot of them. Unfortunately, over the last several years, the numismatic prices have gotten too high, so we focus on American Eagle and Buffalo. With that being said, the 1/10 ounce gold eagle, the 2023 1/10 ounce gold eagle, is fantastic, and it's $37.50 over its melt value. It's fantastic because it always carries a premium. It always has carried a premium. In my career, there has never been one coin that has ever exemplified that more than the 10th ounce eagle. It's made in tiny supply, it has huge demand, and buy or sell, it has big premiums. But what it offers you is the most liquidity with the least subjectivity, because it's clearly marked 1/10 of an ounce. It's brand new. It's 2023. It's just a miniature eagle. If I had my choice, it's the only type of bullion I would own. But from a standpoint of it being a good value in relation to 1 ounce coin, I can't say that it is. They have high premiums, but everyone should own some. They come in tubes of 50. They're the size of a dime. A roll of dimes, you fit 3 of these in the palm in a closed fist. So you have 15 ounces in each fist. You got 30 ounces, in 1/10 ounce coins, or 300 little dime size coins. Supreme liquidity, supreme flexibility, huge demand, and I think everyone should own some. So a departure from silver, albeit I still believe that it is, if people are looking for the greatest value, it's in silver. If you want some gold, the 1 ounce gold eagle in Buffalo is a better buy value. But I think everyone should own some 10th ounce eagles. And that's why we're running that today. $37.50 over its melt value. Take the price of gold, divide it by 10, add $37.50. And there you go. And I love them. And I've been accumulating them for over 30 years. And they are by far my favorite bullion coins. So I think everyone should own some. There's no minimum order. And while supplies last, that's this week's special. And I'm sure we'll be back with more silver next week unless things change. But this is something that I figured was worthy of offering.
Well, we always appreciate that. We know it takes a lot of footwork on your part and on the team's part to come up with the quantities and the pricing and everything that's going to be a real opportunity for our subscribers and our viewers. So folks, share this video widely and take to heart the checking into the companies that were at the Rule Symposium, and to the heads up that Andy shared both through his conversations with Jim Rickards and others at the show about changes coming in the status of the U.S. dollar and the stability of the U.S. banking system, and make prudent choices so your family can not only survive but thrive going forward. Andy, that's what we're here for. That's why we ask you back every week for the weekly market update. And thanks for being here on Liberty and Finance.
Always good to be here. My dog says thanks as well. You guys have a good rest of your week, and look forward to catching up with you next week, Don. Again, thanks for having me.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.